Welcome to the Deep Dive, brought to you by Access Softtech, the premier provider of digital banking solutions. Today, we're jumping into something pretty big, a potential major shift in finance that could really change how you handle your money.
Yeah, it's definitely got people talking.
We've been digging into how huge retailers, think Walmart, think Amazon, might be about to shake up traditional banking using stablecoins. Our mission, is to break down what's actually going on and maybe more importantly, why it should matter to you.
It really is a fundamental shift potentially on the horizon. And the news hook here, it came from the Wall Street Journal. They reported that both Walmart and Amazon are looking into issuing their own stablecoins. That's the key piece here.
Okay, stablecoins. Maybe just a quick refresher for everyone.
Sure, so a stablecoin is a kind of cryptocurrency, but it's designed to have a, well, stable value.
Uh-huh.
Usually it's pegged to something like the US dollar. So unlike Bitcoin, which can be all over the place, these are meant for, everyday buying and selling. Reliability is the goal.
Right, reliability. And this isn't just any company jumping in. We're talking Walmart and Amazon. These are giants.
Exactly. Together, they account for almost, 20% of all retail sales in the U.S. Online and offline is huge.
So them creating their own currency, even a stable one, that's more than just adding another service, isn't it?
Oh, absolutely. It's leveraging their massive customer base and their control over the checkout process in a totally new way.
Hmm.
It's kind of a shift from focusing only on who holds the money to who owns the customer and the way payments happen.
The payment rails, basically.
Precisely.
Yeah.
And, the stablecoin world itself, it's already pretty significant even before these guys potentially jump in. Last year, transactions topped, I think, $6.6 trillion.
It's just around 6 trillion.
Yeah. And it's growing fast, over 60% year on year. A lot of that is international payments, making them faster and cheaper.
So it's already a big active space, and the market noticed this Walmart Amazon news immediately, right?
Instantly. MasterCard shares dropped, 6.2%? And Visa fell over 7.1%. Yeah.
Wow. That kind of reaction tells you something, doesn't it? It says the existing players see this as a real threat.
It's a direct challenge to those established payment networks, yeah. Which brings us to the core issue for, say, credit unions. If legislation eventually allows this to really take off, what's the direct hit for them?
Okay, let's break that down. What specific areas are most vulnerable for credit unions?
Well, first off, interchange fees. Those little bits they earn every time a member uses their debit card.
Hmm.
If Walmart, for example, processes payments with its own stablecoin, maybe for next to nothing, that fee income disappears for the credit union. It stays with Walmart.
Ouch. Okay, what else?
Assets under management, or AUM, that's the money they manage for members. If members start holding significant value in, say, a Walmart digital wallet.
Less money parked at the credit union.
Exactly. Plus, you lose member retention, maybe even direct deposits if people start getting paid into these retail ecosystems.
It really sounds like that cryptocurrency steamroller analogy we talked about feels pretty potent.
It does paint a picture, yeah. It highlights the pressure.
So the choice for credit unions seems pretty stark then. It's like, get on board somehow or risk getting flattened.
That's the crux of it. It sounds dramatic, but the potential disruption is significant.
What does getting on board even look like, though? It sort of makes you think of that old saying.
Napoleon. If you can't beat them, join them.
Right, that one.
Yeah, and in this context, joining them might mean integrating with these systems, finding ways to offer value within this new landscape, maybe even offering stablecoin services themselves. Because if they don't adapt, the risk is that the money and the member relationship just flows elsewhere. It bypasses them.
So peeling it back, the big takeaway isn't just big retail is using crypto. It's that they could build entirely separate financial tracks.
Parallel systems that don't necessarily need the old banking roads.
Which forces institutions like credit unions into a tough spot, needing to innovate really quickly.
It definitely accelerates the need for adaptation.
So, thinking about all this, maybe the question to leave everyone with is this. What creative steps could your bank or credit union take? How might they adapt to keep serving you well in this changing world? And ultimately, what does this all mean for the future of your money?